independence and objectivity of any experts whose work is used in the audit. So the auditor's responsibility extends beyond simply accepting an expert's report. They must critically assess the expert's objectivity and address any potential conflicts of interest. Assessment of experts' work. So the auditor doesn't simply accept the expert's findings at face value. A thorough review is necessary, focusing on consider sources data used, assumption made, and consistency, and the results of the work of expert in relation to auditors' overall knowledge and client and operation. So, and consider source data used. The auditor examines the data. The auditor examines the data the expert used to reach their conclusions. Are the data sources reliable and appropriate? So, in assumption made and consistency, the auditor scrutinizes the assumption made by the expert and assess whether they are consistently applied. And results in relation to auditor's overall knowledge. The auditor compares the expert's findings with their own understanding of the client's business and operation. Do the results align with the auditor's overall assessment, or is there any significant discrepancies require further investigation? If the auditor is concerned regarding the competence and or objectivity of the expert, discuss with the management, perform additional audit procedures, seek audit evidence from another expert. So, and discuss with management, the auditor communicates their concerns to the client and perform additional audit procedures. The auditor might conduct further audit procedures to gather additional evidence and to refute the expert's findings. In cases of significant doubt, the auditor might seek a second opinion from different experts to validate or challenge the initial findings. So let us proceed to development of overall audit strategy and detailed audit plan, scope, timing, and direction. So this defines what will be the audited, the time frame for the audit, and the overall direction of the audit work. So it establishes the boundaries and objectivity. Characteristics of engagement. So this considers the specific nature of the audit engagement, including the type of audit, for instance, financial statement audit or compliance audit. So the client's industry and any unique circumstances. Reporting objectives. So this clarifies what the audit report will cover and the information it will be communicated. So it aligns with the overall audit purpose and the needs of the stakeholders. Consider other important factors. So this acknowledges that other factors such as the availability of resources and any relevant regulations should be incorporated into the strategy. So the audit strategy provides a high-level roadmap that guides the entire audit process, ensuring it's focused, efficient, and meets the specific needs of the engagement. It is the foundation upon which the detailed audit plan is built. Detailed audit plan addresses various matters identified in the overall audit strategy. The detailed plan directly addresses the issues and the areas identified in the higher level audit strategy. It translated the broad strategic goals into specific actions. Often overlaps with the development of overall strategy and not necessarily discrete or sequential in process. So the development of the detailed plan often overlaps with the creation of the overall strategy. So they are not strictly sequential processes and they often evolve. Audit plan Audit plan includes description of risk assessment procedures, further audit procedures, and other audit procedures. Risk assessment procedures. These procedures helps identify and assess the risk of statement. Well, the further audit procedures, these are the substantive procedures designed to gather evidence about specific assertion in the financial statement. While in the other category, audit procedures, this category covers any additional procedures deemed necessary to achieve the audit objectives. In short, the detailed audit plan provides a concrete step-by-step guide for conducting the audit operation, the high-level directions set by the overall audit strategy. So it is practical, detailed for the audit team. Audit program. List of procedures used to gather sufficient appropriate audit evidence. So this is the comprehensive list of all the steps the auditor's evidence. So the goal is to obtain enough high-quality evidence to support the auditor's opinion on the financial statements. Procedures relating to test controls and substantive procedures. So in test of controls, these procedures evaluate the effectiveness of the client's internal controls. Strong internal controls reduce the risk of material misstatement, allowing auditors to rely on them and potentially reduce the amount of substantive testing needed. For substantive procedures directly test the assertion in the financial statements. They aim to gather evidence about the accuracy, completeness, and the validity of financial information. So the audit program is a detailed step-by-step guide that ensures the audit team systematically gathers the necessary evidence to support their audit opinion. So it is crucial document, no? It provides structure and direction for the audit process. Timing of audit work. Not all procedures at period end. Auditors don't perform all audit procedures at the very end of the accounting period. This would be inefficient and might delay the completion of the audit. Often, auditors perform procedures during the intervening period and known as the interim period. So the auditors often perform some procedures during the period before the period end. So this is known as the interim period. This allows for a more efficient use of time and resources, and it can help identify potential issues and early on. Audit timetable should be prepared and agreed upon with the client. So a timetable for the audit should be created and agreed upon with the client. So this ensures both parties are on the same page regarding the timing of different audit procedures. So proper planning is a key to a successful and timely audit. Other consideration: company personnel assistance. Auditors often rely on the assistance of the company to gather information and data. So this collaboration is essential for efficiency and access to internal knowledge. Work of internal auditors. If the company has an internal audit function, the external auditors might review their work to potentially reduce the scope of their own procedures. So this can save time and resources, but internal auditors must still assess the competence and objectivity of the internal audit function. Work of other auditors. In situations involving multiple auditors, for instance, for different subsidiaries or segments of a large organization, the external auditor might consider the work performed by other auditors to avoid duplication of effort. Again, the quality and the objectivity of the other auditors' work must be evaluated. This organization. If the client uses service organization, for example, for payroll processing or IT services, the external auditor might need to consider the controls of those to assess the overall risk. So, in summary, this slide emphasizes the efficient and effective audits often involve leveraging existing work and resources, but this requires careful evaluation of the quality, competence, and objectivity of the sources. That concludes our discussion on planning an audit of financial statements. Thank you for your attention, and we hope this discussion has been helpful.